Joining us now is Philip Richter. He is president and co-CIO at Hollowbrook Wealth Management. Joining us on set. Philip, great to have you here. And I think, Senator Tillis made clear that he is not opposed to Warsh. In fact, he thinks he's probably a great choice to run the Fed. It's about the process. It's about defending Fed independence. So I guess eventually it happens. What's your take on this new head of the Fed?
I think he's an impressive guy, right? He's got a long track record, both in the private sector and in government. He's done what he said he would do. He's been very consistent. I think he's a bit of a surprise choice, and I think he would do a great job.
Seems like the market is taking him as a hawkish choice. We had, we're only off 0.2% now, but futures were down 1% when we started talking about this last night, this morning, and the dollar has strengthened.
Yep.
Is that necessarily a bad thing? I mean, the terminal rate comes up a little bit. The economy is running fairly smoothly, and the AI investment case is strong.
Yeah, but I think there is this outstanding concern about the debt levels, both in the U.S. and globally. I mean, globally, $100 trillion or $300 trillion of debt with $100 trillion of GDP, roughly. There is concern among market participants about this debt burden, pretty much mostly on the public side of things, the government side. I think this nomination is giving everyone a little bit of pause and happiness.
So how are you at Hollowbrook and your investors investing around this? Because we're still looking at all-time highs on the stock market. We're looking at almost record tights in terms of spreads over treasuries. And the 10-year, frankly, isn't bursting out. It's still at 4.25.
Well, what a time to be alive, right? As a passionate investor and a student of markets, I don't think there could be a better time to be alive with all the things that are going on. The S&P at an all-time high, gold at an all-time high, silver at an all-time high, corporate profits, earnings at pretty much an all-time high, but debt at a huge all-time high. So once you get this bifurcation of things seem to be going really well running with businesses in general, but you've got this mountain of debt where we have almost a third of government debt of the U.S. has got to be refinanced in the next 12 months. We've never seen, that's never been done before, right? It's a lot of debt. Right. So, I think it's about, for us at Hollowbrook, we don't change with every day and pivot and do things. It's about fundamentals, sticking to basics and sticking to your principles. So, liquidity is really important. Quality is really important. Diversification is really important. And really sticking to your principles.
On the diversification front, this is what I've heard from a lot of investors recently about gold, although it's been stunning, really, to watch the rise in price. Are you investing in gold? Are your clients investing in gold?
We've always been invested in gold. The only problem we have now is our position in gold has become too big for our portfolios. So we have to think about what does that mean, right? I think the rise of gold is stunning for two reasons. One, how sudden it was. Although, if we were in January of 2020, gold was around 1,500. It's now close to 5,500. But I think what's even more stunning is what gold mining companies are up against here, right? More complex geology, difficulty in mining in very difficult jurisdictions, environmental restrictions. So there is going to be no supply response. If every institutional investor in Midtown pushed the button for 1% in their portfolio, I don't know where the paper market, yes, the futures options, but the physical market, it's very hard listen to the earnings call of major well-run mining companies, Newmont, Barrick Gold, Agnico Eagle. These guys are having a tough time.
I would be remiss if I didn't ask you about cars. That's how we know each other. You're on the board of the Revs Institute with Miles Collier. You have the Turtle Invitational at the Coker Farms in Bedford, a great car show. We've seen amazing prices paid for a 250 GTO at 38 million and change, an Enzo at 17 million, right? A 288 GTO at 11 million. Is that also part of this diversification and the debasement trade? People looking to do something else with dollars?
Unequivocally. And now look, the Bachmann car that sold at Mecum last weekend, that Ferrari Enzo was as perfect gets. Very low mileage, hermetically sealed, all the bushings, everything was perfect. But 17.8 million for that car. Those cars were in the threes a year ago, bumping up to 4.5, 5. And the leap upwards to that kind of price tells you that buyer obviously wanted the car, but is thinking about that as an asset. And it is. The collector vehicles are unequivocally a true asset class. Now, many of my clients look at their holistic life, and we've got our real estate, we've got our equities, we've got our muni bonds, and we've got our car collection, right?
So what's next? I mean, you've already seen a generational shift, and we've only got, 20 seconds.
Yeah.
But we've gone from 250 GTO now to Enzo. What's next?
I think you just continue to see a rise of the highest quality, lowest mileage, original examples, or vehicles that have unbelievable provenance. They might not be perfect, but if they were driven by Schumacher, right, and won a race, that's an important vehicle. They're going to keep going higher because I don't see the dollar debasement trade stopping, right? Our government, Doge has failed, right? We're not going to be cutting costs. The big beautiful bill adds trillions. And there we go.
It's all about diversifying away because of debt. Philip Richter from Hollowbrook Wealth Management, thanks very much for joining us.